Hi everyone, we're Group 90%. Our research topic is the effects of the US tariff on the Chinese electrical equipment industry during the US-China trade war. We will firstly provide you with some background information about the trade war and the industry. Then we will talk about our methodology employed in this paper, followed by our data and analysis. We will also look into the impacts of tariff on the overall industry. Let me talk you through some background information to start with. Since China joined the World Trade Organization in 2001, its foreign trade proliferated, with the US as the largest trading partner. However, there was a trade imbalance. As we can see from the graph below, the US has a growing trade deficit with China. This became a major political issue in the 2016 US presidential campaign when Donald Trump promised to make changes to what he calls the unfair trade practices. After he was elected, he started imposing tariffs on Chinese imports aggressively. As of June 2019, more than 450 billion worth of Chinese goods have been imposed tariffs, and China has retaliated with tariffs on more than 170 billion worth of US products.
For the industry that we selected for the further research, electrical equipment industry play an important role in developing China's industrial economy. It's estimated that the added value of the electrical equipment industry accounted for 3.57% of GDP on average from 2008 to 2018, and the portion is increasing, which to up about 3.96% of the entire Chinese GDP in 2018. Moreover, speaking of the export aspect, it took up 27% of the total export product in 2018. The industry also comprised the most considerable portion of the U.S. import from China since 2013. However, under the influence of tariff, it has experienced a 70% of fall in its U.S. export value from 2018 to 2019. The influence will be introduced in the following presentation. In the next slide, we'll introduce the methodology that we use in the research.
Now I will briefly explain the methodology we use to verify our hypothesis that the increase of U.S. tariffs will cause an overall decline in the electrical equipment industry. We adopt the empirical method of difference in difference, which is DID in short, and it is a commonly used model which could analyze the differential effect of a treatment. In our research, we use DID to evaluate the impact of additional tariff imposed on sub-industries of the electrical equipment industry during the US-China trade war by comparing the average change of the control group and treatment group over a continuous period. Next, I will show you our regression analysis model and explain all the variables involved. Our model is composed of one dependent variable and three binary variables. For the dependent variable, we use the monthly China to US export value growth rate for each product. We do not use their monthly export revenue directly for two reasons. First, different sub-industries may have different magnitudes of export value, and we wanted to convert it to a more uniform order of magnitude for the analysis. Second, since the growth rate is a relatively bounded variable, it will be easier for us to filter out outliers, and it is more convenient in judging the reasonableness of the regression results. For the three binary variables, they are constructed to indicate time, tariff implement, and their cross-influence respectively. For the binary variable time, we divided all the months into pre-trend and post-trend according to the time at which the tariff was imposed, so that the dummy variable equals to 0 for all the pre-trend months and equals to 1 for all the post-trend months. For the tariff binary variable, we considered 5 sub-industries of the electrical equipment industry in our analysis, and they were classified as one control group, which had no additional tariff implemented during the trade war, and 4 treatment groups, which had additional tariffs implemented during the trade war. The value of the tariff binary variable for each product applied the same rule as the time binary variable, which means that the dummy variable equals to 0 for all the control group products and equals to 1 for all the treatment group products. So based on our regression model and the rules for binary variables to take values, we could conclude the values for all products in the chart and graph shown here. As you can see, the beta 3 in our regression model, which is the coefficient for the cross-influence variable, stands for the difference in difference caused by the additional tariff imposed. To analyze the impact of the imposed tariffs on the Chinese electrical equipment industry, this paper will look into literatures in depth, both from a quantitative and a qualitative approach. Qualitative impacts are difficult to measure, so we intended to use quantitative effects, such as industry export growth rate, in order to support our evaluation of the qualitative impacts.
In order to investigate how different product and different tariff level may contribute to the general influence of Chinese electrical sub-industry, we select 4 sub-industries with different product category and tariff levels. Household appliance sub-industry without tariffs imposed during the trade war are selected as control group. Treatment groups with similar growth rate are selected, including transmission operator sub-industry, electric heater sub-industry, electric motor and generator sub-industry, and electric control equipment sub-industry. The sum of treatment groups took up a significant portion of the export value of the overall industry, which was about 15.6% in 2019. Data collected is ranged from July 2017 to December 2019. It covers the pre-tariff and post-tariff stages. Also, it avoids other influential factors such as the spread of COVID-19 in 2020. As shown on the PowerPoint, the first 2 industries are imposed with additional tariff 25% each in 2018. The rest of 2 are exposed with the tariff 25% and 55% separately in 2019. In the next page, we'll present to you our result of DID analysis.
Here are the results we have generated from RStudio. Numbers in the blue text boxes are the estimations of the post-on-treatment groups, which reflect the pure impact of the tariff after we subtract the effect of the control group. Here we run a DID process on the control group and transmission apparatus subindustry. The coefficient here means that this subindustry has received a negative 26.3% export value growth after the imposition of the tariff. Numbers in the orange text boxes are the value of the t-test. Here the absolute value of t is 1.84. So we have 90% confidence about the conclusion above. For the rest 3 sub-industries, we have also carried out the same process but adjusted the time point for each group according to the actual situation when they received the imposed tariffs. The following 3 slides are the results for sub-industries of electric heater, electric motors and generators, and electric control equipment. Please pay attention to both of their estimations and t-values. From the table generated by RStudio, we can see that coefficient is negative 0.181, which means that this sub-industry has received a negative export value growth after the imposition of the tariff. From the table, we can see that EMG treatment group has received a negative 0.17% export value growth after the imposition of tariff. The negative coefficient here shows that the sub-industry of electric control equipment has received a negative 0.16 export value growth after the imposition of tariff. Among all four treatment groups, our model shows less significant t-values except for the first treatment group. Therefore, we may not conclude the estimations of the other three groups at a very high confidence level. Compared with the negative 26% export growth rate change of transmission apparatus subindustry, it shows that these three subindustries have suffered less from the additional tariff. In the next part of our data analysis, we calculate the export value growth rate of each product in the four treatment groups and control groups from their monthly data. We then compute the arithmetic mean of growth rate and generate line charts in order to present an intuitive effect of the raise of tariffs. So let's first take a look at the transmission apparatus subindustry. We observe a sharp decline in May 2019, which was just the moment the US imposed the tariffs on this subindustry's products. However, only from the line charts of the rest three subindustries, we can see an immediate decline after the rise of tariff levels. Combined with a Part 1 analysis of the DID, we can conclude that the trade war led to a negative but insignificant impact on the export value growth of the three subindustries.
According to our result, the negative coefficient shows that all of the four treatment groups are being negatively influenced by the additional tariff during the trade war. While some sub-industries received less negative impacts than others, we try to provide some explanations for this varying degree of impact. Among the four sub-industries, the transmission apparatus sub-industry is the one that has been most negatively influenced, and there could be two possible reasons behind. First, the transmission apparatus are mostly independent products that can be used directly without any value-added process, and therefore, this non-complementary relationship can result in a high price elasticity of its product, so the demand for transmission apparatus may drop significantly after the imposition of the additional 25% tariff. Second, given that the transmission apparatus is the major export product of the Chinese electrical equipment industry, and also its export value is far more greater than any other sub-industries, it is reasonable to conclude that it has been influenced most significantly among all the sub-industries analyzed. Compared with the transmission apparatus sub-industry, the impacts over the other three sub-industries are less negative, and there could be a number of possible reasons. First, this can be caused by the nature of the product. And let's take electric motors and generators as an example. And these are products used to convert electricity into mechanical energy, and they are widely used across different sub-industries. According to our research, the electric motors and the system they drive consist of 43% of the global electricity consumption, where over 60% of electricity is consumed by electric motors in the industrial sector. And this indicates that the electric motor is a necessary component across many sectors, and therefore firms may have to purchase them regardless of the skyrocketing price. And this low elasticity of demand could possibly be a reason why the export value didn't fall dramatically after the additional tariff. Second, as the imposition of tariff is a sudden change to many firms, this may encourage firms to minimize the cost of tariff by taking advantage of the tariff regulations. According to the Forbes, one of the possible loopholes is that if at least two transformations happen outside of China, then the product may be considered as not made in China. And therefore, suppliers may consider moving part of their supply chains outside of China while keeping the core parts unchanged, so that to avoid high tariff imposed on their product. One evident phenomenon is that many large firms, both Chinese and foreign, started to shift productions out of China. These firms include Samsung, Inventec, Goatech, and luxury position. Yet these examples are only a portion. There are many other smaller firms moving productions away. Together, the cost of tariff could be enormously significant. As the trade war goes on and firms continue to shift productions out of China, the effect of tariff is difficult to measure. However, we can reasonably suspect a fall in the Chinese electrical equipment exports, which is supported by our findings. Although China's electrical equipment exports grow steadily, it is growing at a slower rate than the past years. As we can see from the graph, the export delivery value dropped to a 2% low by the end of 2018. Other than that, a diversion effect was also observed, with Vietnam and Taiwan as the two largest beneficiaries from the trade dispute, as shown in the graph below. Vietnam's exports to the US increased by 20% when the first round of tariffs was imposed on China. Taiwan's exports to the US also increased by 4.2 billion in 2019.
With tariff imposed on Chinese electrical products, those Chinese companies whose profit is mostly generated from their exporting operation to the United States have to face an increasingly hostile trade environment. In order to understand the trade friction impact on corporate financial performance in the electrical equipment industry, we selected 216 listed companies within the industry as samples. Using the financial index analysis to study the effect of the trade friction on these companies' financial indicators and to explain the trade friction effect on the listed company. As shown in the following chart, the net profit margin and return on assets tend to be stable before 2018. However, since 2018, the net profit margin has fluctuated downward. Because of the tariff imposed, the higher cost means that companies will either have a deteriorated competitiveness due to a higher retail price or lower profitability if companies choose to absorb the cost.
The trade war between China and the United States will also have many hard-to-quantify effects on the Chinese electrical equipment industry. For instance, because of the pressure of tariffs and the increase in labor prices, foreign manufacturers may no longer consider China as a production center. Thus, China is likely to suffer from a loss of foreign direct investments and other opportunities, such as employment opportunities. Chinese electrical equipment industry might also experience difficulties in technological innovations as they no longer have the opportunities to learn from the more developed manufacturers. Overall, the US tariffs are likely to hinder the long-term growth and development of the Chinese electrical industry. From the perspective of the overall industry, we can observe a negative effect on the Chinese electrical equipment industry, supported by a slower export growth rate and a lower export delivery value. The tariffs also harm the industry-related firms as they observe the cost of tariffs to stay competitive in the global marketplace. This is supported by our finding that listed companies suffered from lower net profit margins and a lower operating revenue growth rate since 2018.
On January 15, 2020, the two sides of the trade war reached an agreement that the first stage of the US-China trade friction come to a brief end. But that doesn't mean everything can recover. US remains 7.5% to 25% tariff level on the $317 billion worth of goods. For China electrical equipment manufacturers, they are still in a tough position. China electronic manufacturing export enterprise should draw lessons from the crackdown and realize that to maintain a stable market share, they must accelerate the improvement of their core competitiveness. This is the end of the presentation. Thank you for your listening.